welcome to Forex School Uganda. I am Godfrey. I want us to do a top-down analysis of the EURCHF, that's the Euro Swiss franc, see where it is at right now and where we anticipate it to get to in the next coming hours or days. So we're going to do a top-down analysis right from the monthly time frame down to the lower time frames. Now this is the monthly time frame. So looking at this monthly time frame, what we see is that price has been creating a series of lower highs and lower lows. When you look at this, you can see that price has been making a series of lower highs and lower lows. So this is a high, this is a low, this is a lower high, a lower low, a new lower high, new lower low, a new lower high, a new lower low, and now price has just completed making a new lower high. And when price is making lower highs and lower lows, it is downtrending. So currently the monthly time frame is bearish. So looking deeper into this, you can see that this high is higher than this high here, and in making this high, it left behind a rejection candle, which we commonly know as a pin bar, signifying a rejection of higher prices. And so this could be an indication of a completion of the lower high move, and so this should be the next move to the downside to create a new lower low, as it is the case in downtrends where lower highs and lower lows are created or are formed by price. Also, the other thing to note is that price right here formed a high which actually stretches from far left, and here it moved impulsively and broke above it, but then just as quickly as it broke above it, it close back below it, which leaves this as a potential fake breakout or a false breakout to the upside. And I want you to notice how this candle closed. It had dropped to this level here, but then retraced and closed way above here, leaving behind a long tail or a long wick. This, you could call it a rejection wick, but there's no support in sight that we could say it is rejecting. And so this to me is not a rejection wick, but rather a wick that is to be filled by price. So this should act as a magnet to pull price from way up here where it is right now down to create a new lower low. The monthly time frame is technically bearish, as we see that its perspective is bearish when you look at the structure of the market. And so we'll drop down to the weekly time frame to see what perspective it gives us. This is the weekly time frame, so I want us to dissect it to see what perspective it gives us. Now we see price moving impulsively to the upside on this weekly time frame, reach this level here, it retraces to the downside, then moves up again, breaks the high of the breaks the previous high, creates a new high at this level here, then drops down, retraces again to this area here, and now we see that it has closed bearish. So the current weekly candle has closed bearish, but then there are more details that I want us to look into concerning this particular pattern that it has formed upon closure. So when you look deeply into this pattern, we see that it formed a high here, formed a new higher high, but then came and formed a new lower high. So this high is lower than this high, making this a lower high, which also makes this a higher high because this high is higher than this. But then the next high that is currently being formed is a lower high. Now that makes two lows and one high between them. What does that appear like? Well, it's a pattern that we know in trading as this being a left shoulder, this being a head, this being a neckline, and then this being a right shoulder. Price is currently forming what we know as a head and shoulders pattern, which is a bearish formation, further solidifying our bias as bearish. And so in the next coming days, we should see price drop to the downside to at least retest this neckline here to complete what we know as a head and shoulders pattern, which is currently in the process of formation. The other thing I want us to notice here is that price has been rejected at this point here, rejected here as well, rejected again here. There was a rejection right here, then we see another rejection here, a rejection here as well, and it's likely the same rejection here because price has already closed bearish on this weekly time frame. And now when we join this area from the left to the right, you can see that this is a very strong rejection area, and now we see that price is touching it, and we can have confidence that this area is also rejecting price. And the fact that it was able to hold it to the downside, it means that we could see price move to the downside. And so this leaves our perspective as far as the weekly time frame is concerned as bearish. We also see that price broke through this level to the downside impulsively and corrected to this very area, has been rejected at this point here. We are potentially likely seeing the start of the move to the downside. This was a very strong impulsive move to the downside, followed by a retracement, which we like to know as a correction, because when price moves strongly in one direction, it leaves behind gaps, and these gaps have to be filled. And so price, in the process of filling these gaps, it moves correctively, and that's what it did, correcting some of the gaps that were left behind by this impulsive move to the downside. So this was an impulsive leg followed by a correction leg. Now when we see an impulse and correction, what do you expect to come next? We expect to see another impulsive move to the downside. Now when we bring our Fibonacci tool and we measure from the high of this leg to the low of this impulsive move to the downside, we see that price tested the 61.8 golden Fibonacci retracement level, and it was rejected from this very level to the downside. Now adding up the confluences of this support area, the head and shoulders formation, as well as the Fibonacci retracement level being rejected at the 61.8 retracement area, it gives us a clear perspective that we need to see in the market, that informs us that the market is technically bearish on the weekly time frame, which is the same that we've seen on the monthly time frame. And so the monthly and the weekly perspective are both bearish. So we'll drop down to the daily time frame to see what perspective it gives us concerning price for the coming days. This is the daily time frame. So looking at this daily time frame, we see that price moved impulsively to the upside and has been in what appears to be a flag, which is bearish in nature. And so we see price broke out of this flag pattern to the downside, and now we saw a retracement to come and retest this support area right here. And now the last candle has closed as a bearish candle with a long rejection wick to the upside, indicating to us that now what was support is now holding price to the downside as resistance after price retesting it and being rejected to the downside. And this is an indication to us that the bearish structure of the market is still intact, and we are likely to see prices go to the downside, making the daily bias, leaving our daily bias as bearish, with the same aspect we see of the weekly and monthly time frames. And so from the daily perspective, once we see price break below the low of this bearish candle, we expect nothing but price to drop further down to come and fill this range here, to fill the gaps that were left behind by price while it moved heavily to the upside. And so the bearishness of the market is still intact, and from the daily perspective, which is similar to the weekly and the monthly perspective, we can confidently say that this trend is bearish. And so we will be dropping to the lower time frames, especially the 4-hour swing trade. And so this coming week, dropping to the 4-hour time frame, we will be looking for swing trades to the downside, or we could drop down further to the 1-hour day trade, or the 30 minutes and the 15 minutes for our scalp trade for the week. However, if one would like to trade using the daily time frame, again, this is not trading advice, it is just my personal opinion. If one wanted to trade from the daily time frame, this is a potential trade that could be taken. The break of the low, this candle here, the close the high, this candle, and probably targeting this loss down here, but the first take profit target as the support area right here. Now, if price were to go according to our analysis and continue to at least this first area, that would be a quick 3.26 reward of the risk ultimately down at this here for a 5.18 risk reward in the market. So that's our analysis for today concerning the Euro CHF for the coming days. And if you're new to the channel, kindly subscribe, like and share the video.